All attendees are in listen-only mode.
G'day everyone, welcome to another Ask the Expert webinar, and I'm just going to, as usual, go through and give you a quick summary of where we're at the moment, and also just my thoughts on where the market may be headed in the next short period. But as usual, I'd like to start with a little bit of political humour, and I couldn't resist this one. This one's an absolute classic. I've only got one this week, but it's a good one. So obviously Peter Slipper getting into a taxi cab, and he says, just take me somewhere I can get away from all these false accusations. And the cabbie says, okay, middle of the Nullarbor, that'll be $4,300. I think that's just an absolute classic. Okay, just a reminder, general advice only in this information, any particular markets or stocks that I talk about. So a quick recap on the Aussie market, and we didn't have too bad a day today, finished pretty close to the highs. So the breakout above 43.50 on the ASX 200 is still being sustained, only just, but it's still there. And the S&P 500 futures are still holding above 1400, which is pretty positive as well. So all sectors were higher today, energy, banking and materials, and it was a much better outcome for materials today. The small cap energy stocks certainly remain the, I guess, the most buoyant part, but volumes really have dried up quite dramatically in the last couple of weeks. So we're seeing some retracements in those small cap energy stocks, which was always going to happen, and some of them have come back 25 or 30% in the last week or so. So just an indication of what can happen to those stocks when they get a little bit overvalued and they get a bit overhyped. And this is in a market that's still very positive. So you can imagine what happens if you get too exposed to these little guys, and for some reason we got a sudden fall overnight in Europe or the US. So certainly a bit more care needed at the moment. Now, there was a takeover for Eureka Energy today, and we are going to see a continuation of this sort of thing, I believe, in the energy space and also in the minerals space as well, and with gold stocks. It's not something you can really trade for. I think you know, if you get good entries and you maintain a bit of a spread of different ones, then you might be fortunate enough to grab one of them. Every now and again, when we got one today, and this was a stock in the portfolio that we got into about a month ago, so that was a good outcome for members of Specialist Share today. Gold stocks, what's happening there? We'll have a look at a chart of the gold stocks, or the gold miner indices in the States in just a minute. There's certainly a few slightly more positive signs with those indices. Our local gold stocks, or our local gold producers, have held up very well compared to other gold stocks around the world, but they haven't really responded much in the last few days. Gold exploration stocks, some of them have been hit pretty hard, and we've seen some of them fall 40–50% in the last month or so. So that's an area where you certainly do need to take care. The other area that I'm seeing a bit of an upswing in the Aussie market is we're certainly seeing more profit downgrades. There's been half a dozen reasonably high-profile ones in the last couple of weeks. So that's a real indication of particularly where the retail side of the Australian economy is going and where the advertising space is going, obviously with retailers being one of the main advertisers. It's impacting print media, it's impacting television, it's really across the board. And I think ultimately I can't see any way that it's not going to impact jobs, and particularly if Wayne Swan is serious tomorrow night with a budget and is going to try and frame a budget around a reduction in government spending, and I hope he's not going to just try and target the wealthy to balance the budget. So if that's going to be the case, then we could see government sector jobs being lost as well. Now, there's been a lot written, obviously the 1st of May tomorrow, has been a lot written of late as to whether it's a good idea to sell in May and go away. That's been a catchphrase in the financial markets for probably 2 or 3 decades. There is a little bit of a pattern in the US, so there's a bit of a bias towards weaker returns across the middle of the year, but it doesn't always hold, and so certainly I would never trade on that basis, but I would take perhaps a little bit more care on that basis if our market is showing those signs. And what I'm seeing is a significant reduction in liquidity across the board, but in particular the small cap space. Now, when the liquidity dries up in the small caps, there's just no point trying to punt them because there's just not a lot happening. You've got to just be very, very stock specific and look for really strong signals and get good entries. To be sitting on a whole pile of small cap stocks is a recipe for disaster at the moment. So my view is not to be too influenced by that throwaway line, but certainly to look at your overall exposure and look at the quality of what you're sitting on at the moment, because there's one thing that does happen in the States is it's the summer holiday season. A lot of people go away. Trading volumes are quite often half what they normally are on the New York Stock Exchange. And when trading volumes are that low, prices can move more significantly in either direction because there's just less buying and selling going on. Looking at interest rates, 0.25% cut tomorrow looks to be pretty much a done deal, and I would say that is well and truly factored into the market. And the possibility of maybe 0.5, it's maybe a possibility, but I think it's pretty unlucky. I think if we did get a 0.05 rate cut tomorrow, I think you'd see another maybe leg up in the banks, because I think this is allowing the banks to build their profit margins back up again. So that would probably be a positive. But up to this point in time, I think that rate rise is already priced into the banks, and I wouldn't be surprised if we only get the 0.25% tomorrow if we actually see the bank stocks come off a little bit. And we'll have a look at a chart of the finance index. So look at the S&P. As I mentioned, the average profit gain was about 11.5% for the quarter, which was very strong. So that plus the chart pattern on the S&P puts the odds pretty heavily in favour of the correction being over. So I don't think we need to worry too much about a significant downside. But just going back to my comment on small cap stocks, even if sentiment in the States remains very positive, even if commodity prices remain very positive, unless trading volumes pick up in the small caps, then the vast majority of them are not going anywhere unless there is a very stock-specific announcement made. Copper back above $3.80, which is a real positive, and we've also seen very positive earnings results and trading from Caterpillar, which is probably a real bellwether for the resource industry around the world, because they're obviously at the front end. They're selling tractors and tyres and all those sort of things to the global resource industry. And I know that all the tyre manufacturers are absolutely flat out keeping up with demand, and for some of those really large scale mining truck tyres, I know that there's waiting lists of up to 18 months for some companies to get their hands on them. So that really is an indicator of just how buoyant the mining industry is at the moment. Just in terms of effective positioning, as I said, liquidity is an issue, so entries for small caps is far more critical now than it has been for the last 3 months. Unless you're very, very experienced in trading small caps through these kind of markets, then you either want to take extreme care, stay out of the market, or get someone to help you, because it's just a recipe for getting burnt if you don't know what you're doing. If there are breakouts, there's still a few breakouts happening. I'm probably getting about 1/10 of the number of breakouts when I do my scans every day than I was. So what we were getting was breakouts on pure speculation. If a stock happened to be in the right industry, the price was going up in anticipation. That's all stopped now. So pretty much the breakouts are going to be very news specific and news driven. And look, there will be some of those because there are some good things happening. You know, there's lots of drilling going on in mining and in oil and gas, and most of the companies are in pretty good shape financially. Some aren't. Some are getting very low on cash and will have to raise cash. But you know, by and large, there are some good stories out there. So there will be a lot of failed breakouts. I've been through these cycles dozens of times. There will be a lot more failed breakouts in the next 2 to 3 months. So be careful. Okay, let's just have a look at some charts. And we'll start with just the S&P, and you can see here we basically formed it's a double bottom or a slightly higher low. We had a previous high on the 17th of April, which was at 1393. We've exceeded that now the last 2 trading sessions. So the odds have to favour the fact that this correction's over. It formed a sort of an ABC pattern. The C was truncated, it was cut off, but that's okay. That happens occasionally. And the next stop on the bus route for me is 1440, so we'll see what the market's doing around about that level. Just while I think of it, we'll just have a look at the gold mining indices. This is the GDX. You can see we had 3 higher sessions to finish last week, and this is the GDXJ, which is the gold mines, the juniors, just a little bit further up, and we'll be forming a new high, new short-term high, which would be a good positive sign. Let's have a look at our market today. The ASX 200 index, you can see, strong day, closed 43.96. So not quite sure where it's going to head in the short term. It's lagged the S&P so badly. Personally, I don't track the ASX 200 very much because basically it's just telling you what BHP, Rio and the 4 major banks are doing, and it doesn't actually tell you a whole hell of a lot more than that. But just for interest's sake, here's the finance index. You can see there's been a good trend higher since the 8th of March. And don't appear, have I got the materials? No, I don't have the materials index queued up. I'll just grab the materials index. So I looked at it on a weekly chart. You can see the banking index was very positive. There we go, I did have the materials index. As you can see, materials has really been stuck in this rut for the last 2 or 3 months, not really going anywhere, but a more positive trading day today. And I think that was about all the charts that I was going to look at. So I'll pass over to you folk and see what questions are forthcoming. Now, the first question is, when will the Aussie gold stocks be likely to move north? How long was my special share education firm commence trading? I'll deal with the second part of the question. We started the formal operations for this business in August of 2008. So our timing was terrible to start. We ran smack into the GFC and managed to survive that, came out the other end, did reasonably well in 2009 and into 2010. 2011 was obviously a year in two halves. The first half was good, and from April on it was awful. And so that's been our history so far. Now, when will Aussie gold stocks likely to move north? That's a really good question. It's one that I guess I've been expecting the Aussie gold stocks to have broken out probably 3 months ago. It's just so overdue, it's not funny. And I did post a video today that you may have seen that really addressed that question about about why gold has lagged and why sentiment to gold stocks has lagged, and it was really in response to a bit of a report that tried to explain away why gold wasn't doing much, and that was because demand in India and China of late was down for specific reasons, and that seemed like a fairly logical report to me. I didn't have a problem with the facts, but I guess the point I was making was that you can't extrapolate and say, well, those facts will remain the same, and therefore gold's going to remain where it is, and even if it did, gold stocks are still immensely profitable compared to where they've been in the past. And the gold stocks that I'm looking at in Australia, and there's probably only about 8 or 10 of them that I would really consider as higher quality ones. They've got so many things going for them. They've got expanding production, they've got plenty of blue sky, they've got no debt, they're very profitable, and they're in great shape. Mining, of course, is inherently a more risky business than let's say a mining contractor, but these guys are in pretty good shape. So to me, they are going to have to move north. When I don't have a crystal ball, so I don't know. And I guess you've always got to factor in that it could be an extended period of time. They could just keep meandering around where they are. So, I mean, I've got plenty of exposure to gold, both in my super fund and also in my trading account. But I've also got exposure to lots of other things as well. So it's all about balance, in my view. So hopefully that answered your question. Okay, I'm not sure if that's a question, Peter, or a statement. It's a statement about having lost a fair bit of money in the last 3 weeks, and I guess I've been warning about this for nearly a month now to members and non-members about what I saw coming. And it's not that I've got any kind of marvelous crystal ball or predictive ability. It's just I've been through this so many times. I know what the signs are, and I've really been warning about this for a period of time. So my overwhelming advice is that unless you are highly experienced, that you either get out of the market or you get someone to help you, because the next 3 or 4 months is the kind of market where at the very best, if it's kind of a sideways market, it's easy to get sucked into trades that keep failing. And you don't have any big losses, but you just it's death by 1,000 cuts. You just get this series of little losses all the time. And I know, because I used to be caught in that pattern, and until I found a way to break out of that pattern. So my really strong advice to anybody that's not highly experienced and knows how to handle these kind of markets, either get out of the market or get some help. And there's still great opportunities. So obviously my advice would be get help, because there's still good money to be made. But you just need so much more care than what would have applied in the first few months of the year. And for those that are taking their cues from stock forums and the like, you got to ask yourself what the experience is of the people whose information you're acting on. You don't know whether they're successful or where they're coming from, how rigorous their research is. So that would be my advice to anybody in that mode. Okay, well, there don't appear to be any other questions at this stage, so we'll call an early halt to it, and we'll see you next week. Cheers.